If you remember the video about First Solar, you'll understand the importance of energy independence and strategic resources in supporting companies with a domestic focus. When talking about strategic metals, Piedmont Lithium is a development stage company based in the US, working on establishing an integrated lithium business to support clean energy and global energy security. The company plans to supply lithium hydroxide by processing spodumene concentrate from assets they own or have an interest in. They have multiple projects in various locations, including North Carolina, Tennessee, Quebec, Canada, Ghana, West Africa, and Newfoundland, Canada. Piedmont Lithium's common stock is traded on NASDAQ under the symbol PLL, and their CDIs are traded on the Australian Securities Exchange with the same symbol. Piedmont aims to become a leading producer of lithium hydroxide in North America by utilizing geographically diverse and sustainable spodumene assets. They plan to produce battery-grade lithium hydroxide from spodumene concentrate, using the Metso Autotech pressure leach technology along with other common manufacturing processes in the industry. Their goal is to develop sustainable lithium hydroxide production operations in North Carolina and Tennessee. The company's portfolio of projects and investments are developed to optimize both near-term cash flow and long-term value maximization. At full capacity, they expect an estimated lithium hydroxide manufacturing capacity of 60,000 metric tons per year, compared to the current total estimated U.S. lithium hydroxide production capacity of approximately 20,000 metric tons per year. The Carolina Lithium Project aims to be one of the lowest-cost lithium hydroxide manufacturing operations globally, while the Tennessee Lithium Plant is expected to produce 30,000 metric tons per year of lithium hydroxide using technology that reduces solid waste and emissions. Piedmont asserts they have competitive strengths that include being a U.S.-based company that can benefit from domestic policies supporting the growth of the battery supply chain, revenue generation from NAL through an offtake agreement, scale and diversification of resources with spodumene holdings in Quebec, Ghana, and North Carolina, advantageous locations and infrastructure for their projects, strategic funding including a $75 million investment from LG Chem and potential ATVM loan funding, greenfield opportunities for modern technologies at Carolina Lithium and Tennessee Lithium projects, and an experienced management team. Yet even with such advantages, the company, like any other, is still subject to U.S. federal laws and regulations for their lithium mining and manufacturing operations, including NEPA, Clean Air Act, CWA, RCRA, CERCLA, Federal Mine Safety and Health Act, and the Occupational Safety and Health Act. These laws govern environmental protection, air emissions, solid and hazardous waste management, and worker safety. The company may also be subject to state-level environmental laws and regulations regarding land reclamation, hazardous waste disposal, groundwater protection, and endangered species preservation. Compliance with these legal frameworks could result in delays, financial guarantees, capital expenditures, and increased costs for the company. Then on to marketing and sales, which benefit from a partnership with Pronto Minerals for marketing byproducts from their projects. In addition, the company has entered into offtake agreements with Tesla and LG Chem for spodumene concentrate supply. So even though they face competition from other mineral processing companies with greater resources and established relationships, they believe there is demand for their products. However, Piedmont's ability to generate revenues, achieve and maintain profitability, and generate positive cash flow from their mining activities are still dependent on more general factors with their risks and uncertainties. These include fluctuations in the market price of lithium or lithium hydroxide, difficulties in marketing and selling their products, higher than expected capital costs, extraction costs, delays or reductions in extraction activities, shortages of skilled labor, introduction of more stringent regulatory laws, and delays in equipment availability. Overall, Piedmont's U.S.-based approach will help, but success will also depend on overcoming these general challenges other lithium companies face in developing commercially viable mining operations. For more on Piedmont Lithium and other companies, follow Ascencore. Thanks for watching and have a nice day.